Welcome to Markets Now. I'm Michelle Rook along with Tomm Pfitzenmaier with Summit Commodity Brokerage. We're seeing a lot of red on the board in grain and livestock futures trade this morning. And Tom, thanks for joining us. A lot of that red coming from kind of this risk-off environment that we have in the trade today.
You know, the last couple of days, there was some fear that the Fed was going to continue to keep rates high, or at least extend their pause and maybe raise again end of the year or early into next year. And Fed Chair Powell seemed to indicate that that was exactly what was going to happen. That he's still uncomfortable with what the inflation rate is, and they're ready to pull the trigger on higher rates again. And that kind of sent everybody into a deep the last couple days. It also has strengthened the dollar, put selling pressure back into the grains and livestock markets. So, yeah, I guess we're going to have to endure that for maybe through today, and then we'll be back to trading whatever the fundamentals are for corn and the meats, and I mean the grain markets and the meats. Excuse me.
Yeah, and when we talk about the grains, obviously we're in harvest, and so we're seeing some harvest pressure as well, aren't we?
I think there's a little bit of that, although I don't know that there's a lot of selling going on. I mean, you always get
No.
some off the combine, but I think, this higher dollar, we had an export sales number on corn that was really at the low end of trade expectations. The soybean export sales were below the lower end of trade expectations. Meal was minimal. Bean oil, of course, we're using all that domestically, so we're not exporting much of that. But the fundamentals of the market aren't that great if you assume that the USDA's yield numbers are correct.
Yeah, and what are you hearing about yield right now? And what are you thinking? Is this crop getting smaller, Tom?
Variability seems to be the word that pops up the most within fields and across the tree. I don't know. When you were involved with the Pro Farmer Tour, they came up with bigger pod counts. If maybe these bigger pod counts offset some of this reduced seed size on soybeans. Corn, I don't know. You can hear corn yields all the way from 130 to 280. So yeah, it depends on who you're at, where you're. So I don't know. It's I guess my suspicion is the USDA is still a little bit high on both, which could be important on soybeans. On corn, I don't know. If you have a 2.2 billion bushel carryout and you lose some of it and pull it down to 1.9, is that really all that friendly? I mean, maybe it is a little. Maybe it pops you up to 520, 540. I doubt we can go much more than that on corn, especially with export sales as poor as they are. These high crude oil prices may help the ethanol industry ultimately. That could be a good thing on that part of the demand side. But livestock numbers are down, which isn't going to be great for feed demand, I wouldn't think.
Yeah, and I want to go back to the export numbers because when you look at our commitments so far, our totals, they are down from last year, like 34% on beans. I mean, corn and wheat they're all behind, aren't they?
Yeah, I mean, China's been buying the daylights out of Brazilian corn and, and soybeans, and that's a result of them having record crops down there.
Yeah.
Historically, they tend to run out of Brazil tends to run out of beans around about the time our harvest starts. So we sort of have that window of opportunity between now and whenever their new crops available. Well, by all reports, there's a good chance they're going to have beans for sale all the way until their new crop's available, which really is going to be a damper on our export demand for soybeans. And then you get the fact that China is tending to buy most of their beans from Brazil and very little from us for whatever reason. And I don't know, you've got a fairly tight carryout in beans, but if we can't sell them, maybe that doesn't matter either.
So let's talk about technicals, Tom. We are seeing double-digit losses in soybeans, and November has now taken out the 100-day moving average. Where do we stop now? Does 13 hold us, or do we have to go back down to that August low?
I think you have to go back to that August. Now that we've taken that out, I mean, we've actually slipped under 13 here over the last minute or two. I think that takes us back to that August low at around 1282 and a half, I believe. So another 20 cents down, and then I guess we're going to start to again, reconsider what the yield is, and you'll start to see some positioning, I think, for the end of next week's stocks report, quarterly stocks report.
Yeah, no doubt. Corn, technically, we kind of ran up into a little bit of chart resistance or stopped at chart resistance yesterday. Technically, anything we should talk about there?
Well, corn, the trend and momentum indicators have been kind of turned back higher. Had a lot of people believing we might get a chance to retest that $5 range. I don't know. We kind of ran out of steam up in that 485 area, and it looks to me like maybe we pull back again and retest that support at 470.
Okay. And let's talk about this cattle market. We made new contract highs, all-time highs in both lives and feeders early in the week, and then kind of put some reversals in. So we're kind of maybe due for a little correction, or are we getting caught up in this risk-off outside market environment too?
Well, I think both. Number one, we needed a correction, or we are getting caught up in this risk-off situation. Uh, all we've been talking about for, I don't know, 2 years is how how many cattle we've liquidated, how tight the numbers are. Cattle on feed reports coming up here. They're looking for on feed of 98%, placements back down to 93.5%. So the number side of that cattle thing is still friendly, and probably will be. The big question, of course, is demand going to hold up? You're talking about people maxing out their credit cards. You're talking about interest rates potentially going high. Are we going to have a soft landing? How is that going to impact the consumer? So, beef's pretty expensive, especially relative to the poultry side and the pork side. So, I don't know that if there's going to be a fly in the ointment, it's going to be on the demand side for beef.
Yeah, we do have a cattle on feed report coming up here tomorrow. That is expected to be friendly again.
Right. Yeah, that's what I'm saying.
Yeah,
The numbers certainly look like
sure.
they're going to be for
What
sure.
about hogs? Yesterday, we had a nice rally, but we got up into the upper end of the trading range, up into resistance. And so, are we due for a little bit of a setback there?
Again, I think, like you said, that risk off trade's part of what's going on here today. We've been kind of friendly. The hog market, we've gotten up into resistance. We've gotten a little bit overbought. So that's a market that could certainly correct a little bit. Now, we do have a hog and pig report due out next week. Again, expect to see continued liquidation in the hog herd. So that those numbers, I don't think they'll want to sell off too hard ahead of a potentially friendly hog and pig report.
No, that makes sense. All right. Thanks for joining us, Tomm Pfitzenmaier with Summit Commodity Brokerage. That is Markets Now.